Hey there, and welcome to Real Investment News. I'm Mike O'Neill. It has already been a wild day for the markets. We had that sharp sell-off right after the opening bell, and when you take a look at where we are now, the Dow is down about 80-something points. The S&P is down 4 points, the Nasdaq is just 1 point, so we've almost totally recovered from that big dip. Here's the dip that you can see this morning on the S&P, and it's coming back up here. Now, investors are starting to buy into the dip from the past few days of drops, but we are still about 4% off of our record highs. Now, just a few minutes ago, we received the Purchasing Managers Index for January. This index surveys hundreds of purchasing managers in the manufacturing sector and other sectors on things like production level, new orders, and inventories. Now, it actually fell to 53.8 in January. That's actually down from 54.1 in December. And as you can see, the number has been falling for the past 3 months, but it's not actually as bad as it looks. This is a combination of surveys from the services and manufacturing sectors. And when you split the two of them up, well, that's when you see that we're getting some mixed messages. When you look at services, which is the green line that you see here, the index is at 53.3. That's a 9-month low. Now, output rose, but at a slower pace than before, and that led to a growth in backlog. This number was also affected by the inflation of fuel and output charges. But the manufacturing PMI, which is the red line here, actually grew to 55.5. That is actually a 3-year high. It's a reflection of the strongest expansion in factory activity since the March of 2015, and new orders grew the most in 12 months. It's also a reflection on why we have these better than we've seen before jobs numbers. Now, leads us to the Conference Board's Employment Trends Index. Now, right now, this just came out also. This actually hit 106.93. That's actually the blue line that you see here. Now, that's up slightly from December and a 5% jump from 1 year ago. As a matter of fact, when you look at it, it's actually higher than it's been since, well, beyond the year 2000. And you can see how that blue line index lines up with the jobs numbers that actually came out on Friday, which is the red line that you see here. Now, the chief economist for the Conference Board says, for right now, there are no signs that things are going to be slowing down, which is actually good news. Now, thank you so very much for watching. Please remember to follow us on Facebook, Twitter, YouTube. Check out our past reports on realinvestmentnews.com. I'm Mike O'Neill, and we'll see you again in a couple of hours.